8th, Manafort was convicted on 8 counts of tax and bank fraud. Tonight's Mega Millions jackpot will be worth $1 billion. That's the second largest jackpot in U.S. lottery history. Tom Roberts, NBC News Radio.
Re-elect Riverside County Sheriff Stan Sniff on November 6th because Sheriff Sniff will keep our families safe. Let's keep a proven and experienced leader in this critical office as he continues to modernize our Sheriff's Department by integrating technology tools for his deputies and dramatically improving their training and equipment. Vote for experience, proven leadership, and integrity. Vote to re-elect Riverside County Sheriff Stan Sniff on November 6th. Paid for by Friends of Stan Sniff 2018.
Welcome to the Tom Hartman Program. I'm live right here, Monday through Friday.
Are you ready for the #1 progressive talk show host in America?
71% of people say that the information they get from their friends and family, they take more seriously than the stuff they read in the media. Only 42% of Americans think the media is the most credible source of news. And therefore, if you're informed, if you're awake, you need to be telling your friends. You need to be talking to your friends and family.
24-time New York Times best-selling author and has nearly 6.5 million listeners nationwide.
These are crimes. These are international crimes against humanity, and I would love to see somebody held to account in this administration.
Introducing Tom Hartman on KCAA Radio, weekday afternoons starting at 2.
Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929. That's a telephone number. Got a call today from a guy who is looking for a mortgage. So I know that the telephone number out there is working, and most people write that phone number down, and then they listen to the show, and then they call in later. And it may be the best way for you to get in touch with the guests you want to talk to, or myself, or any number of questions you might have about what we're talking about on the show. And on the show today, we're talking to a couple of new people. Actually, one old person who's out in the Inland Empire, Maria Uribe. She's been on the show several times. She's an originator out there, and we're going to talk about what's going on in San Bernardino and Riverside in terms of the availability of housing, as well as what's going on with the mortgage rates. And then we're going to talk to a guy we've never talked to before on the show, and his name, of course, is Robert Childs, and he has a company called YourDebtSolution.org. And when we spoke yesterday at a while, and by the way, LinkedIn, I don't know if anybody out there is on LinkedIn, if you use LinkedIn, if you like LinkedIn, but I found it to be absolutely awful. And I'll tell you why. Because I have probably 1,400 different people on LinkedIn, on my LinkedIn. I publish articles. I, send out the video feeds of the show, teasers about what I'm doing. I'm trying to be as active as possible in terms of both using it, but maybe like me, everybody who's on LinkedIn looks at it as kind of a Facebook minor. Meaning not Facebook Lite, but Facebook Minor, meaning most of your social interaction is on Facebook, but LinkedIn you kind of use, you kind of don't use. You're told you need to use it. Look, I hired a couple of people to help me write my profile better, how to interact with people better. So anyway, I found this person on LinkedIn who was actually talking to radio hosts and podcast hosts around the country, forming a group of us. It's the first time in, I don't know, how long's LinkedIn been around? How long's it been around?
Oh, probably 10 years at least plus.
Daryl, right? Okay,
yeah.
Fine. So 10 years. This is the first time in 10 years I've had anybody ever contact me on LinkedIn. And like I say, I'm not just a fly on the wall looking around. I try to be interactive. I try to engage people as much as possible. But I think there's, like all social media, unless you're on Tinder, you're not quite sure what you want and what you're going to do. On Tinder, absolutely, you know what you want and what you're going to do, and it's pretty successful, don't you think, Daryl?
Absolutely. The thing that I find, Facebook is social, absolutely. And when you try to actually pitch something or sell something on Facebook, you get half a dozen people that are very upset about it.
Right.
That's not the format for it. But LinkedIn is B2B, right?
Right.
You're
That's what it's supposed to be.
Selling something to somebody else, recruiting somebody,
right.
Product, service, whatever. And whenever I click on adding somebody that's requested, it's followed up immediately with them trying to sell me something.
Right, and I hate that because that's not what I'm looking for. For instance, in this group that we're forming, that is, like-minded people in the radio business, we're really going to try to help each other by providing guests and other, I guess, information, maybe form a pool of us with the number of stations and podcast listeners and try to go out and get a sponsor for all of us. Try to do something that we could do together as opposed to me saying, hey, you know what, why don't you give me all your money and I'll just talk to you on the radio. I mean, that sounds like what I get pitched at all the time. So anyway, Robert Childs is going to come on from yourdebtsolution.org, a guy I met through LinkedIn, and his company talks about both credit restoration and how to manage your debt. And he's been around a long time. He's had big companies in the past that he's sold. So he's a pretty accomplished guy. I spoke to him yesterday for the first time. So I'm looking forward to having him on the program as well. We talked a little about rates. Let's talk about rates. For the first time in quite some time, we have 30-year fixed rates over 5%. Now, you think about that for a moment. 5%. In as little as 18 months to 2 years ago, the interest rates on 30-year fixed mortgages were 3.25%. So coming up quite a bit, 3 rate hikes this year alone at the Fed, meaning that obviously your short-term interest rates, car loans, payday lending, credit cards, these things are really affected by what goes on at the Fed. Your mortgage rates soon thereafter or soon before follow suit, even though the 10-year note is really what we're basing all of our mortgage rates on. But they seem to have a symbiotic relationship, one versus the other. And by the way, the rates are made difficult, not because they are difficult, but because it's better to confuse you so that you don't understand what's going on, unless you're an economist or can talk to somebody who can tell you what's going on. And we've got an economy that's based on spending a ton of dough on mortgages without knowing a darn thing about how the rate was acquired. And I think that is a crime. It should be made more simple. It should be easier to understand. And anybody who's recently got a loan will know exactly what I'm talking about. I go through loans, I don't know, let's say we do 30 loans a month. Okay, so we're doing 360 loans a year, between 360 and 425. That's what we've done consistently for the last 10 years. 10 years, yeah, 10 years. So we're doing thousands of loans, probably close to over $1 billion in loans within that time period. So when I look at a set of loan documents, and they are vast. We could have as many as 500 pages in a loan package when it's submitted and finally done. And when you're a consumer and you're trying to look at this stack of paper and you hear the calls by, I don't know, the federal government or the CFPB or HUD or any number of other agencies out there, and the hand-wringing that goes on in the state legislature or up at Congress about the difficulties and making it simpler and cheaper, you haven't got a clue when you're looking at these documents. You look at 2 inches worth of paper and go, you got to be kidding me. What do I have to do? Where do I have to sign? And that's the problem in the loan business. Now, I'm a broker and also a lender, so I understand the front end, which is what we call origination. When a person sits down next to you, whether it's at the bank or you're doing it online with Rocket Mortgage, or you call somebody on the phone and fill out what they call a loan application or a 1003. You are basically dealing with a person on the front end, me, a company that talks to you directly and gets your application. That is your sole source to really find out what's going on your loan. Try to explain that 500 pages. I know the difficulty, What, you got kids? Forget that. Let's read these 500 pages of loan documents. It's not happening. There are a few people that will do it, that will do the research. Why do you think millennials don't want to buy anything? It is so complex and difficult. Let's say you're a millennial right now, or you're even beyond the millennial, whatever the next generation is. It's already in college, by the way. You think about that for a second. The non-millennial people are just rounding into college shape. My daughter, who was born in 1999, she met the cutoff, but in reality, she's the next generation. She's already a sophomore in college. Well, the debt that you get out of college right now, which is the biggest crime in America, when I was a kid, $5,000, that was what it cost per year. And I only had student debt of $5,000 when I got out of college. Right now, $5,000 in a state school in California wouldn't get you a semester, let alone a year. It's easily $25,000 if you include room and board and books. I mean, so if you're saddling yourself and this generation with hundreds of thousands of dollars of debt, let's say your average student at a state school, any state, gets out with $100,000 in debt. Okay, that's right there. They have to deal with that debt right away. Now, let's say the economy's great, which it is right now. Let's say that wages are going up, which it is slightly, 2.9% this year, or is it 2.09%? It's one of those two figures, but it's low, right? Guy making $10 an hour is now making $10.20 an hour. So it's not like it's going up wholesale. It's not doubling his income or her income out there in the marketplace. So you're trying to deal with your college debt making, $15 an hour. How are you going to do that? And now you're supposed to go out and buy a house, and now you're supposed to read these loan documents. You're supposed to hire, professionals to help you through that. All I'm saying is that I understand that we've got rising interest rates in a climate where you need more trust than less trust, and where you're going to get that. So if you're out there right now and you're listening to the issues and the problems facing everybody in the mortgage industry, I 100% understand. I'm Jeff Barton. I'm your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. Pick up the phone and give us a call. I appreciate it. I appreciate everybody who listens to the show each and every week, San Bernardino and Riverside counties. I want to say hi to everybody out there. We have a lot of originators. I got a call again this weekend from a borrower out in that area. I got a call from a loan officer out in that area who had heard me for the first time. Now, we've been on air out there for 4 or 5 years, and I want to thank the people out at KCAA and KMET, as well as K-Tahoe up in Northern California and Nevada, for the great audiences that they deliver each and every week. It's funny how people eventually find you. The person, the loan officer, who I happen to know, who called me, I was really impressed, because she was almost surprised to hear me on the radio. I said, well, I told you I was doing this show. She goes, no, I was driving around. And I think there's a connection to people when they hear you on the radio, whether they know you or not, or whether they, will call the number. But there's a comfort. I listen to tons of talk radio, and I've been listening a lot to baseball playoffs this year as I did last year. And there's an intimacy on the radio that you don't get in any other medium. I don't care whether it's on your phone or whether it's on your computer, or whether you're just driving around listening to the radio. There's an intimacy of the voice to the ear, and a privacy that you feel that you're being talked to individually. Now, there are the lecturer radio programs, and certainly in the mortgage industry, there are plenty of us out there that just want to tell you what to do and how to do it. But on our show, we try to create a situation whereby we're providing some information for you to be able to take and use any way you want. Certainly, we have the phone number. Our email address is info@malibufunding.net. You can see us on YouTube, and if you go to YouTube, Jeff Barton, the real estate voice, and you can see a ton of our video, which we shoot this show for the radio station feeds that blasted out there the same time we have our show aired on the weekends at KCAA and KMET, and all of the other different social media outlets and media outlets, traditional media outlets, that we are on. But the radio has something that, Daryl, you know more about radio than I could ever possibly know. You know this intimacy and this connection that we're talking about.
Well, things have changed. It used to be back in the 60s, the people on the radio were on soapboxes and would talk down to you, and they were, announcers.
Right, that's
but,
right.
The thing that happened in the late 70s and early 80s was a change toward one-on-one communication. People would talk to you like I'm talking to you right now, just across the desk.
Right.
And radio became your friend. I
mean, that's right.
A lot of people, you were mentioning baseball. To us in Southern California, Vin Scully was the voice of summer. Right. He was, when I was growing up, his voice came out of every transistor radio, both away and in the stadium. And the way he communicated, you felt like you knew him.
Right.
Like he was a friend.
Yeah.
No,
I agree. I love that part of radio and how it's intimate. And speaking of the transistor, last year for Father's Day, I asked for a transistor. Of course, they don't make transistor radios anymore, but I wanted one. I wanted with a little dial thing that you try to, figure out the best way to get the station in clear as possible. It's all digital now, of course.
We all went to bed with the transistor radio under our pillow, snuck it into the bedroom so we could listen to the radio late at night.
Exactly.
Wolfman Jack was coming out, And,
well, you're a rock and roll guy from the Jump Street, right? And even in FM radio today, there's a lack of that really one-on-one because it's all programmed kind of music.
Well, very few stations give people the freedom to have a conversation, right?
Right.
I mean, the rock station here in Los Angeles, they have a rule that the person on the air can't talk for more than 30 seconds.
Oh, you're kidding.
30 seconds, cut off.
Well, and we talk like this, Sirius Radio, which is, of course, a paid service that you have to get in your car. But you get like Howard Stern and a lot of other really notable talk show people who, when they talk to you on the radio, it's exactly like you're saying. It sounds like they're just talking to you. And they're not lecturing. It's just somebody talking. And you listen because you have that connection. So we try to do that on the show here, obviously.
Great storytellers. Beginning, a middle, and an end.
Right.
Yeah.
And I think, well, for me, I really like that. There's something about hearing a story from someone. Now, I know people that can go on and drone on forever. And
that's no good.
No, that's absolutely no good. You want somebody, like you say, they can get to it quickly and move on to whatever their point is and try to fit in another story. Okay, thanks, Daryl. I just was so in love with radio and how it delivers our message. And yet, 5 years into it, I have someone I've known, this loan officer who called me and was just, wow, I didn't know you were on the radio. I'm thinking, how do you not know? I've been telling you forever.
30-second story.
Okay.
Guy used to work with or knew of here in Ventura County.
Yeah.
Right? He's in Canada because he was a Canadian and he had to go back there.
Yeah.
He's getting a haircut up near Squamish or something. Near the.
I know exactly where it is, yeah.
And he's in this barbershop, and he calls me on his cell phone and says, your voice is coming out of the speakers in the barbershop up in Canada, because they were listening to Boss Radio, which is one of the internet stations I'm on every day.
Oh,
what
man.
are the chances of that?
Zero.
Only in radio.
That's right. And that commercial that's on radio right now talks about how radio reaches more people, especially here in Southern California. Hey, if you're listening to this right now, you are among probably 97% of the people that listen to radio. Everybody listens to radio because everybody's driving around or everybody's, in some way connected to the radio. So speaking either here or, as we all do now, on the internet, because everything we do is either recorded for somebody somewhere on the internet, either or through the radio station or our own YouTube channel or any number of other ways. But yeah, if you're out there and you're listening to the sound of my voice, I hope the information that we provide to you is good. I usually think it is. So let's get into a little bit more of the information. We were talking rates earlier segment. We talked about 5% rates. 5% to 5.125% is the 30-year fixed. The FHA VA loans are 4.5 to 4.75%, which is still a very good loan. Although on FHA and VA, everybody knows you have to add in the mortgage insurance premium, which will bump that rate up. So the APR is going to be quite a bit different. Make sure you ask. The 15-year fixed is 4.5%, still a great rate. By the way, my own particular loan I had that I never refinanced when it went below what my rate was 5.125%. I had a 15-year fixed. I had a 30-year, then I refied it into a 15-year. The payments were very low, around $2,000 a month. I was able to pay off the loan. We paid it off last year. That loan was great for me. I really liked that loan. And you might be out there right now thinking, well, you know what? Can I afford in 15 years to pay off my loan if I have to pay a little bit more on interest rates than I have in my 30-year fixed? Well, the savings is incredible. It's really amazing. So if you're thinking about it, give a mortgage professional a call or email or however you want to do it. You certainly can call us at any time, email us. You can text me. Let's see, all the different ways, smoke signals. You can certainly send up wireless. Remember the wireless word? I love those. Did you ever have a wireless set, a chrysalis set?
Of course. Built one from Heathkit or something.
Exactly right. My brother, again, we're back into nostalgia. Back in, oh my gosh, what year was it? Had to be the late 60s, maybe 68, 69. There were computer kits that you could buy and build your own computer. Now, he purchased one, got it home, and built his own computer. We had no idea what you could do with it, but he got it, the lights to work, and I don't even think they had printers in those days, but whatever it was that he was doing, it worked. It was great fun, and really liked it. The ARM products out there right now, 4.25% to 4.75%, and these rates are still pretty amazing. And there are some people out there who have yet to refi based on either being in a 10-year IO or having some kind of a ARM product come due now. There were a lot of people back in 10, 11, and 12 who got into long-term ARM products that are coming due now. So the rates are still pretty awesome. I want to get into some other things later on in the show. But anyway, I'm Jeff Barton. I'm your host for the Mortgage Voice, and we'll be right back. Thanks.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. 888-713-2929. That's our telephone number. If you pick up the phone and give us a call, we can try to help you by answering questions. Purchase market, refi market, want to take money out for whatever reason it is, and there are a lot of good reasons to take money out of your house, and there's a lot of bad reasons to take money out of your house, and we can try to help you figure out what's the best way to go. Some people have low-income documentation. Some people have bad credit scores. There are all kinds of solutions for you out there, so if you need answers to these questions, I can help you, and you can give me a call, or you could email me, info@malibufunding.net, or you can talk to our next guest, who is a terrific loan officer. I've known Maria for a long time now, and she was kind enough to come on the show once again from the Inland Valley Funding Company, Maria Uribe. Maria, how are you?
I'm doing good. How are yourself?
I'm fine, thank you. I get nervous when I'm introducing people. I don't know why, but I just do. I hope that introduction was okay for you.
It was good. Thank you.
You're quite welcome. Okay, talking off air, we're talking about originations and how the business is. Tell me where it is that your office and where you do business, so the people listening know that you're local and in the area.
Most of my business is in the Inland Empire area. My office is located in Rancho Cucamonga, so
right.
It's San Bernardino County and Riverside Counny, the areas that I deal the most.
Okay, excellent. How's business right now?
Right now it's kind of slow. It's slow a little bit, but it's still doing good. I mean, rates are still good, and
right.
Properties I see more like changing to a buyer's market, not so much seller's market, but it's picking up. We're okay.
Now, okay, when you're talking about switching from a seller's market to a buyer's market, do you find that sellers per se tend to take some time before they realize that they need to drop price?
I think so. Right now, the way the market is changing, yes, prices are kind of like slowing a little bit.
Right.
And, I see them that they're on the market for a little bit longer than before because the rates went up a little bit. So it's harder to qualify a client when the properties are more expensive.
Now, in your daily experiences, are you finding that you need more people on the loan application to qualify income-wise, or are you seeing that, that not as much?
In the area that I'm at right now, yes, we do have files that we have the sons and daughters, even up to 4 buyers, to be able to qualify.
Yeah, well, how do you satisfy all the questions of all these different people when they say, okay, I'll be on this, but am I on the hook? And all the different questions that will come from numerous different buyers really doubles and triples the amount of work that you have to do explaining it all, right?
Yes. I usually kind of like set everybody down to have one meeting and try to answer every question at once. And try to explain to them, obviously, the payments, and try to explain the whole entire process from beginning to end.
I was talking earlier in a segment about them. A lot of loan packages could be, when they're all said and done, 300-400 pages. How do you explain that amount of paperwork to somebody who is new to the process? How do you do it?
I go step by step.
Okay.
I basically do it in process. At first, we run the credit report, explain the credit report, then the 1003, then obviously the income, try to figure out how many jobs they had in the past 2 years, order verifications of employment, and explain to them all the forms that they're involved, especially when there's 3-4 buyers that
right.
they get the over the mail, over the internet, all those disclosures. And there's so many of them, and every buyer gets their own packages, so try to explain it by more details as I can.
I know, and is it easier now or harder now than it used to be?
I honestly don't know, because I've been doing it for such a long time, so I just get used to it.
No, and I can appreciate that. Being a professional in the industry for a long time, you must see that obviously the job is what it is, and this is what I have to do in order to get it done. So it doesn't really matter whether it's harder or easier. This is just what the job calls for, so that's what I got to do.
Yes, that's my answer.
What's happening over there? What, you got a dog around there? A cat? What's happening?
I'm outside my building.
Oh, I see. So you have people who are watching you. Are you drawing a crowd?
I'm sorry?
Are you drawing a crowd of people that are listening to you on the radio?
No, not right now.
Not right now? Okay, very good. Where do you see the market heading in terms of the availability of properties in the area?
I think there are going to be more properties available now.
Right. No, I see that as well.
It's really going to change as a buyer's market, and it's going to give us more opportunities to be able to find, I guess, a better house for the client. But I do see it more as a buyer now.
Yeah, I think when rates rise, people are less apt to pay full price just because they can't afford it. So
yeah, I agree.
I don't know if you've seen the price appreciation in San Bernardino County this year, but it's projected to be a lot less than it was last year, meaning that if last year we were at 6-7%, this year it's probably 4 or 5%.
Wow, that's good.
Yeah, well, I mean, I think affordability is the biggest issue, right? Regardless of whether it's rising rates and dropping real estate prices or the reverse, which was happening for the last 3 or 4 years, where you had low interest rates and higher prices as they would climb. Anything that you can get to where people are able to afford the property more than they possibly could at a different marketplace is a good thing. I think that would help both us and the industry as a whole. Let me ask you another question. When do you think we will see the next rate hike?
By the end of the year.
Yeah, that's what everybody says. They say one more. And I don't know.
I believe it's going to go one more higher, and then I honestly think they're not going to go any lower anymore. I think we're just going to stay like that for all next year.
Now, do you see the employment out there? What are most people doing for a living? I mean, obviously, you've been out there your whole life. You know everybody out there, right?
I wish.
No, but you know a lot of people. I mean, like I say, you've been out there a long time. You own property yourself. Do you see the employment doing better next year? I mean, what do you think? I
think so. And that's the reason why the rates are going higher, because the unemployment rate is really low, and most of the people that I even know and I come across, they do have jobs, and they even have 2 jobs, and they're getting paid more than minimum wage. So that's the reason why I feel that the rates are not going to get any lower, and they're going to stay the same.
Now, minimum wage out in San Bernardino, what is it right now? $10 an hour? $11 an hour?
$11 an hour, and I know that it's going higher.
Yep.
So I honestly do believe that, you know, economy is doing better, so that's saying that rates are not going to get any lower.
Yeah, I tend to agree with that. I read an article today that was talking about how if you have the rates too low and we do have a recession, well, you can't drop rates because there's no place to drop. So that's why another reason why the rates are rising, so that if we do have a downturn, they can drop rates and we can keep the economy afloat by people refinancing.
Yes, correct.
Yeah.
And right now, it's the rates are getting higher. Even though people are refinancing to cash out or pay bills, people that have equity in the properties are removing the mortgage insurance out. Some of them are really good because they either don't have a good FICO score and they have to pay bills or cash out to fix the properties. But there's not as many refinancers as before because the rates are a little bit higher.
Yeah, there's no question. I mean, you're not going to, if you've all things being equal, you're not going to refi out of a 3.25% 30-year fix to get into a 5.25% 30-year fixed. I mean, it just doesn't make any sense.
It doesn't make any sense at all, yeah. And then they're actually coming up with more programs now. They're 12-month bank statements, 24-month bank statements. They have the TIN number. They have even the stated income, if they come in with 30%. So they are coming out with more programs. So that means that the economy is actually getting better.
This is Maria Uribe from Inland Valley Funding. Maria, could you shout out your phone number? That would be great if you could, so people can get a hold of you if they're looking for a terrific mortgage broker.
Thank you. 626-991-5626. Again, 626-991-5626.
Maria, thank you very much for coming on the show once again. I always appreciate it.
Thank you so much.
Okay, thank you very much. That's Maria Uribe from Inland Valley Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's a telephone number. Pick up the phone, give us a call, talk to us about your mortgage. I know you have questions. You either have a rate that's just not what you want, which you're the 1 or 2 people that never refinance, but they're out there. Believe me, I know there are people out there right now with 7 and 8% mortgages that never thought about refinancing that are seeing rates now creeping, crawling, running. It's all past 5%. So if you're out there and you're one of those people, you should definitely talk to a mortgage professional. You can always call us, email us. My Twitter handle is @Jeff6493. There's all kinds of ways to get in touch with us here. And if we can't help you or you just don't feel like us helping you, we can direct you to people that can. I have a number of different loan officers and companies helping me right now. There is a rash of mortgage employment fraud going on in Southern California. I read an article, and I want to quote from it right now. It says, mortgage risk fraud jumped more than 12% year over year. 12%, okay? So what they're saying is 1 in every 109 mortgage applications is estimated to have indications of fraud, okay? Juicing their incomes in order to qualify. How? Okay. And they say the internet is making it a lot easier. So here's what's happening. There are a bunch of sites out there that say, you know, we can get you W-2s. We can get you verification of employment. We can have people answer phones in case they need a check on you and your employer. Now, this is what's been happening over Southern California, and these things in terms of I guess, solutions for people who want to defraud their lender, I guess is the best way to say it. This is what's been going on. So if you're one of these people who got caught in this, well, my company got caught in it too. So we're working our way through it. We're contacting borrowers. We're asking them about refinancing them, finding additional borrowers, selling their house to get out of a situation whereby, hey, you know what? If you do something, you could try to fix it, keep the equity, and nobody's going to come after you. That's kind of the solution out there right now. Because let's face it, if you've got a performing mortgage, which all of these are performing, it's not as if somebody took advantage and never paid the mortgage. That's what happened in '08. In this fraud scheme is called mortgage, what is it called? Fraud for mortgage, fraud for real estate, as opposed to fraud for profit. So in this scenario, somebody did a loan back in, 13, 14, or 15, and they're in a situation whereby the employment was incorrect, but they've made every payment. So what is this paper? And this is what the industry is wrestling with right now. There are many solutions out there, and ours is, of course, to try to make these loans legitimate by getting a real borrower, a real income, and a real interest rate that reflects exactly who the borrower is. It's not an easy task, and anybody out there who is caught usually denies having been caught, and that's just, 5-year-old 101, right? Now, anybody who's had kids, and Daryl, you can attest to this, you've had or raised kids, you know what that's like.
Been around them.
Yeah, exactly. What's the first thing you do when you say to your teenager, did you do X? What do they say?
No.
I don't know what you're talking about.
What is it, the Bart Simpson? Nobody saw me.
No, exactly. I had this guy I knew in college, Willie Corneal. Willie has since passed on. No, he didn't die. He just moved to Canada. So anyway, Willie was a guy that would tell me whenever you get caught at something, he was a great hockey player, by the way. And is anybody out there a hockey fan? You a hockey fan, Daryl?
Not necessarily.
No, not just. So anyway, Willie told me deny everything. He says if you get caught with anything, just deny it. So there are a lot of those out there right now, whether you're thinking about denying the fact that you've been caught. Believe me, people are going to come after you. They are already in the works of trying to come after you. So the best way, if you're in any of these situations, in this type of fraud, is to try to refi out or sell the property so that at least you have the equity, or at least you have a real loan. It may be at a higher interest rate because, let's face it, although the interest rates really aren't that bad. As I said, I had a 5.125% 15-year fixed that I never refied into a lower interest rate. Why? What was I going to go from a $2,000 payment to a $1,900 payment? I mean, really, when you talk about the amount of savings, it would have taken me, 15 years to pay off or to catch up to what I already paid in interest rates on that particular loan. So this is what's happening in the marketplace. We went through the rates. Okay, a couple other things. The fastest job growth happening in the next 5 years.
Well, it's got to be service industry.
Well, yes, it is. It's healthcare related, right?
Insurance,
yes. And by the way, are you tech savvy at all?
Somewhat.
You're very tech savvy.
Yeah.
I mean, in terms of knowing not only what to do to produce radio shows, which you've been doing for years, but also to be able to use the internet, to be able to marry the two together, to be able to take this video feed and get it to wherever it's got to go. Your tech job.
Yeah.
You're basically, an older American like myself who is very tech savvy. And that's one of the big myths out there, that somehow old people aren't savvy enough to get the internet. Now, I don't know. Remember the jive talking back in the 70s in the black exploitation movies that were out there?
An Airplane. It was Barbara Billingsley that said, "Excuse me, I speak jive."
Exactly right. Okay, so if you remember that, there is a language to tech.
Yeah.
That is used by anybody under a certain age. And it's the language I don't know. I know the tech.
Yeah.
I just don't know what the heck you're talking about.
They're trying to make you an outsider.
Exactly. I was talking about the mortgage loan docs, and this is exactly what I'm talking about. When you're having, and you hear the ads on the radio about the fast-talking mortgage brokers, and I hate that term because, I talk fast, but that has nothing to do with my profession.
But you're not trying to do it to confuse people.
It's predominantly like the interest rates, trying to confuse the consumers so you basically are just not questioning what's going on. Now everyone thinks it's the fees that drive up the cost. It's not the fees. Fees are one time. It's the rate. It's like Clinton used to say, it's the economy, stupid.
Right.
It's the rate, stupid. If you can drop your interest rate by a quarter point, you're saving tens of thousands of dollars over the course of a 30-year loan.
Most people on a fixed income do not care what the rate is, what the length of the term is, how much interest they're going to pay, how long it is. They care about one thing.
And what that thing is?
Monthly payment.
That's exactly
all
right.
they care about.
And that's what the car salesman sells you.
When it comes to car,
right.
When it comes to home, anything you purchase over time, if you're on a fixed income, the only thing you care about is the monthly payment.
Right.
And if it goes on for 5 years or 10 years, doesn't make a difference to most people.
And I'm telling you, based on, the way things set up, whether it's in the tech industry, which is what we're talking about in terms of jobs and the growth in the job sector in the tech industry, and everybody is really techie. It's just about the language that's being used that's confusing. That's what happens in the mortgage industry. And if you're really paying attention, I'm telling you, an 1/8 of a point difference in the rate. It's almost worth it for you to look at buying down the rate and the return, because when you buy down the rate, and this is the other thing, it's called discount points, okay? Now, another way that mortgage brokers, lenders make money is that they have that buy down rate. Now, when a mortgage broker, a banker, or a bank turns around and takes that and sells it either to Fannie Mae, Freddie Mac, Ginnie Mae, or bundles it together to sell to insurance companies, hedge funds, foreign sovereignty funds, what happens with that particular rate? It gets sent into different pools. So a higher rate really means that they get sent into a higher pool, they make more money. So if you're really paying a rate that's higher than you think you should, ask them how much money they're making in the pool. Ask them how much money it would cost you to buy that rate down so that you could get a fair rate, not necessarily a rate that makes them the most money. You need to begin to negotiate the rate as much as possible, because it's much more important than paying an extra $20 for your credit score. I know that what's happening in our industry is trying to grind every third party out there as if that's upping the APR. It's not. It's the rate, stupid. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your host in the mortgage industry. 888-713-2929. That's the telephone number. If you pick up the phone and give us a call, we can help you decide what to do about your mortgage. You're sitting there at home, you don't know what the heck to do, and you really need to talk to a professional. We've talked on the show many times, but specifically today, the package that you get of loan documents is unbelievably large. And if you don't have somebody to try to walk you through it, Maria Uribe on the last segment was talking, loan officer out in the Inland Empire, was talking about how she uses a step-by-step process to kind of slow it down for people because it can be overwhelming. So if you're one of these many people who have similar problems, concerns, and you're just tuning into the show right now, you can call me, you can email me, info@malibufunding.net. We're on YouTube. You can, my Twitter handle is @Jeff6493. Anyway, there's a number of different ways that we can help you, and if we can't, we'll try to push you to somebody or ask you to call somebody else who can. We're not here to pitch us. We're here to try to help you. So in that, next guy on the show is a new guest that hasn't been on the show. Robert Childs has yourdebtsolution.org. And we talked off air. And first off, Robert, how are you?
Very good, Jeff. Thank you.
Thank you, too.
Well.
My intros are awkward, so please, if you felt awkward right there, it was on me, not you. So I apologize for that. Listen, okay, so we talked off air a little bit about what your company does, and you have a long history in the industry. Can you just explain a little bit about yourdebtsolution.org and how you try to help people and what your company does?
Sure. We, not to be confused with debt consolidation. Debt consolidation is a long-term payback process where a consumer, does not get a principal reduction on what is owed. It could be in collections or on time with their credit card debts or medical bill debts. That's what debt consolidation does over a period of 3 to 4 years on the payback. Debt settlement is what we do. It takes an average of 3 to 4 weeks to settle it, sometimes a day, depending on how stubborn the creditor is, and it's geared for folks that have stuff in collections, 100% in collections, charged off status, for example, where the lender says, Mr. Smith, I'm sorry, but you've been declined based on the debt-to-income ratio. These collection accounts must show 0 before we can close your loan the next 28 days, for example. So we will walk the client through on a verbal basis, take a look at their credit report, take a look at their collection letters, if any, what's hounding them, are they being sued currently, understand their situation before we take on their case. We do that through no advance fees. We do not charge any money up front, 0, based on performance. So after we come up with an action plan, and does the client have the cash availability to settle the debt immediately to get in that 28 days, for example, to close it, or do they need several months to come up with the money to settle those debts? Our average settlement is 37 cents on the dollar, sometimes more, sometimes less. But ultimately, after we settle it, which takes, like I said, 2, 3, 4 weeks, we will get a payoff settlement letter from the creditor or collection agency, which will enable the lender to be able to do, let's say, a rapid rescore to get it to 0 and improve the client's credit scores very quickly.
Now, there are a lot of people in San Bernardino, Riverside, and up in Tahoe who are still underwater on their house from the last recession, as you well know. Even though we have a low delinquency rate, what we have is people who just haven't been able to climb out of the debt issue. What do you tell these chronically in debt people when they come to you?
Well, if they are, of course, I know, especially up in Northern California, if you're looking at Stockton or Modesto, some of those inland areas of Northern California are still underwater as well, like you said, Jeff. Mm-hmm. But people are going to do this. If they're going to be late on their credit, they're going to make sure they pay the mortgage first if all possible, keep the lights on, food on the table for the kids and themselves, and the credit cards, unsecured debts are going to be paid last, period. So tell people based on their financial situation, after I get to know their credit report and get to know their financial situation, we call it an intake form, which we'll have the client complete to understand their situation. I know them better than they know themselves.
Right.
To say that, well, Mr. Client, I cannot say file bankruptcy. I cannot say, do this or do that. Only to guide them in the right way if they hire us or not. To say, should you go debt consolidation? Should you go here? But most people ask me, should I file bankruptcy?
Right, of course.
No, I can't recommend it. If I was a bankruptcy lawyer, I can't recommend it. But to say that, well, if you do check out at least 2 or 3 different bankruptcy law firms in your area, get the best opinion to think, what that bankruptcy expert would say if you do qualify or not. Of course, bankruptcy may be healthy for some people if
right.
they have no income, unemployment ran out, that kind of thing. But ultimately, just lead them down the right path, Jeff, to say this is what you should do or not do, or in some areas I can't recommend at all. But understanding their credit situation, understanding the debt situation, we can walk them through that process if they hire us or not. That's the point, is understand what they're doing, what they're going through. In some cases, if it's a hardship, the creditors are very sympathetic. They may even say, okay, just give me a nickel on the dollar to settle it and get it out of the way. So with the folks that are upside down on their properties, not a mortgage professional, not a licensed real estate agent,
of course.
But I'd say definitely work with your local agent to see what the best advice should be. Should you do short sale, foreclosure, whatever that may be in that case when it comes to real property.
You've been in the business a long, long time. You've had large company. You're now doing this. What draws you back to this business?
Oh, I love it. I love it when you see a smile on a person's face when they're debt-free.
Right.
I had a client, we just finished up recently, took 3 weeks to settle a $212,000 3 American Express collection debts. And we settled it for less than $50,000, and he was smiling ear to ear. And his credit score went up nearly 170 points after it was done. So,
how does that work? What happens with that? They discharge the credit, or they just? I mean, how do you go from a $200,000 debt to a $50,000 debt and have your credit score go up?
Well, whenever you settle a collection debt, remember, people say, "Hey, Robert, if I use your services, it's going to make my credit worse." No, you can't make worse worse. it's already bottom of the barrel. So
right.
Again, we can't help people with on-time debts. It has to be in collections and 100% or charged off on the credit report. So,
right, I see.
For example, if you settle a measly $200 collection medical bill, you might see a 15 or 20 point raise in your credit score. Imagine 200,000.
Right.
What makes it successful, what we count on, is what we call FCRA violations, known as the Fair Credit Reporting Act. It says anything that's inaccurate, erroneous, or can't be verified must be removed. We had a case where a client owed $7,000 to Citibank, and they reported $9,000 on her credit report. Violation of, because if the bureaus did their job correctly, or the creditor did the job correctly, reporting to the bureaus as $7,000, not $9,000, her score probably would be 50 points higher at that time, at that moment. So that happens about probably 70% of the time. 7 out of 10 credit reports in collection debts will have an FCRA error, which means that there's a good chance, no promises or guarantees, but good chance that debt could be completely waived 100%, taken off the person's credit report, and the bad guys, the creditor or collection agencies, would have to settle with a financial settlement to the consumer that can range between $1,000 to $6,000.
Hey,
and that could take place just over a few months.
Okay, let's talk cost here. And there's no way to soften that. What is a service which to me is invaluable? What does it cost the consumer, or is it based on the debt?
It's based on the dollar size of the debt. You're going to find this except for certain law firms, but non-law firms like ourselves, we charge a fee of 25% of the total collection debt, with a minimum of at least $1,000 on any given one debt to make it worth our while. So, of course, anything smaller than that, the client decides to do it yourself for free. So, if the client has a $10,000 collection debt, they hire us and we settle it for pennies on the dollar. Right. Then our fee would be potentially $2,500. So, for the folks that have equity, we can do things out of escrow. That makes it. But otherwise, if someone says, "Well, I'm a first-time home buyer. I've got $80,000 down payment. I got a $20,000 collection debt." Well, it might be advisable, client. You have a 600 credit score, but if you settle it, you're going to get well over 700 in a matter of no time. And guess what? You may only have to put down 20 or 30,000 with some money left in your pocket.
Robert, I'm up against the clock here. Please tell people, how do they get in touch with you? Phone number, sure. Email?
Yeah. My Jeff will repeat my website. Your Debt Solution, no S on the end. yourdebtsolution.org. My direct phone number is area code 949-371-8885, and my email address is robert@yourdebtsolution.org.
Robert, thank you very much for coming on the show. I want to have you back. This is great information, and I really appreciate it. Thanks.
Most definitely. Have a great day, folks.
And you have a great day, too. That's Robert Childs from yourdebtsolution.org. I'm Jeff Barton, your voice in the mortgage industry. Thanks for listening to the show, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.
NBC News Radio, I'm Tom Roberts. The Justice Department is charging a Russian woman with election interference, but not in 2016. More from NBC legal correspondent Pete Williams.
This woman was involved in an effort to meddle in this year's midterm elections.
Elena Kushinova lives in Russia, and it's unlikely she'll be extradited to the U.S. President Trump is in Arizona to try to boost the campaign of Republican Senate candidate Martha McSally. Trump will hold a rally in Mesa this evening. New details are out surrounding the disappearance of 13-year-old Jamie Kloss, who went missing after her parents were found murdered inside their